The Federal Reserve hiking interest rates by another 75 basis points. GDP shrinking by nearly 1% in the second quarter, bringing the U.S. into a recession. And the Federal Reserve's preferred measure of inflation hotter than expected as President Biden touts an almost $370 billion spending plan to combat the climate crisis. Joining me right now is the former acting chair of the White House Council of Economic Advisors, Tyler Goodspeed, and former CKE restaurant CEO, Andy Puzder. Gentlemen, great to see you this weekend. Thank you so much for being here. Tyler, let me kick things off with you and take a look at the week that was. The Fed raising rates 75 basis points. All of the economic data, including the GDP, taking us into recession. How do you assess the week that was?
Yeah, there was a lot going on, a lot to digest. Look, I was actually talking with one of the members of the NBER Recession Dating Committee earlier this week. I don't think that they will officially call it a recession, but in my view, they look at depth, duration, and diffusion. And the depth of the contraction that we've seen in the first half of this year is actually bigger than the recession in the early 2000s, and it's about the same size as the contraction in the early 1990s and in 1969-70. In terms of duration, we've had 2 quarters. That's, as you've noted, the technical definition of a recession. And in terms of diffusion, look at under the hood. I mean, we had a contraction in business investment. We had a contraction in residential investment. We had a contraction in inventories. We had a contraction last month in industrial production. Really, the only thing that's keeping this show on the road is the American consumer. And the American consumer is starting to lose confidence. They're starting to flag a bit. And their real incomes are starting to decline. So I think that's going to be a real drag moving forward.
Yeah, it's an important point, Andy, and I want to get your take on the consumer. You saw some new numbers on Friday showing us that employment costs are up for businesses, and while consumers are spending, they are going into their savings accounts to pay for essentials like food, fuel, and rent.
Yeah, savings are down. Real income has been down for I think over a year now. We've seen wage growth below the inflation rate, which just your check is bigger, the amount of money you have to spend is less. And the numbers that came out on Friday showed that real disposable income, which is the amount of money people have to spend after taxes as affected by inflation, which is what businesses would look at, was again negative. It's negative for the 6th time this year, which is a real downgrade. If you're an American business, you're going to be concerned about growing. You're going to be concerned about adding employees because it looks like people just don't have as much money to spend. So the economy, as Tyler said, we're heading in a bad direction.
Well, I mean, look, what does this look like? How does a recession play out, Andy? I know that we've already seen job cuts in portions of the tech sector. Also, some companies saying we're going to put a pause on any new hiring. What else, from a practical standpoint, will you expect as we get further into the year and perhaps continue to see recessionary contractions?
Well, a lot of this feeds on itself. I think as you see consumers go negative on spending, consumer sentiment go down, as you see the amount of money that people have in their wallets go down, as you see that they have to spend more at the gas pump or more at the grocery store just to buy essentials, businesses know that, but the people that run businesses are experiencing the same thing that their consumers are experiencing. And you see a less of an inclination to fill open positions. Less of an inclination to create new positions. You reduce your ordering. You don't want to build up too much inventory because you don't know if you can sell it. It's almost it can become a snowball rolling down a hill if things don't get under control because businesses react when they see consumers react, and that's definitely what's happening in the economy today.
Tyler, when do you expect growth to return?
Maria, I think we're probably looking at 2023 because let's look at the components that go into GDP. Exports. I mean, the rest of the world is pretty weak. We had a decent quarter last quarter for exports, but the rest of the world is not looking so great. Inventories, we had a big overbuild in 2021. I think that's going to be dissipating throughout this year. Residential investment is really starting to slow down in a big way, and I don't see that rebounding anytime soon. Business investment, I don't see that recovering in a rising interest rate environment.
Tyler Goodspeed, Andy Puzder, great to have you. Thanks very much.